Let's open up our grain trade today. We'll begin with this corn market in Chicago. And overnight, remember, we had losses of about 3 to 4 cents. Let's take a look at how we're opening up today. Well, on that March contract, just like overnight, we're down 4. We're at 379.5. We have May down 3 3/4. And new crop December is currently down 3 cents. We're at 391 to get things rolling today. On the soybean trade, let's switch over there and begin with the March contract. We're down a couple of pennies. We're now at 8.80 per bushel. And we have the May contract down 2 1/4, September down 2 1/4, and it looks like November down 2 3/4, now at 9.15 3/4. And looking now at our wheat, we begin in Chicago, where we have March opening about 1 1/4 lower. We're at 557.5 on the Kansas City market this morning. We have the March contract there, actually 1 1/4 higher at 473 3/4. Likewise, July also 1 1/4 higher right now on that new crop month. On the Minneapolis wheat, here you have the March just kind of fractionally mixed. Actually, the March is fractionally higher here a little bit ago. The July was down 1 penny at 555.5. So chopping around unchanged here on the Minneapolis wheat. We bring in Dewey Strickler of AgWatch Market Advisors to talk about today's trade. Dewey, is this just symptomatic of a big report coming up tomorrow and traders quieting down, kind of evening positions today?
Yeah, but tomorrow's report expectations are not that high here because the USDA will just make adjustments to the demand side of the equation. Trade is really looking for both the corn, soybeans, and wheat to see a slight decline in the ending stocks here. And as far as global stocks are looking for a decline in corn, also in wheat, but looking for an increase in stocks of soybeans.
Now, Friday, we got the the Commitment of Traders report. Comes out every Friday afternoon. What did that reveal from your perspective there on the grain?
It really hasn't revealed much of anything. Your funds are short 510 million bushels of corn, 480 of soybeans, and those are not really big positions. But they're enough, that they could give the market a lift if we cleared a few points of resistance. They're long about 105 million bushels of wheat, which certainly is not a big position at all, and they could add to that position if we would see a little bit of, support from the report that comes out tomorrow.
So really nothing unusual for this time of year?
Nothing that would get your attention.
Okay, what about the fact that we have those crops out in the field yet in the northern plains and upper Midwest? How do you think USDA is going to handle them? Is that going to be considered to be, quote, in the bin or like on-farm storage, or how do they do that?
As I understand, it's going to be considered in the bin, basically. It's going to be on-farm storage, obviously. So, the trade, we got estimates all over the place, but I don't think trade will really look at that until we get into the spring a little further. USDA will put out some adjustments to that, to the effect of the crops still out in the field.
Sounds like it's probably going to be a little while before they can get out there and do that resurvey, though, too, huh?
That's exactly right. It's going to take a while.
All right. There's been a lot of talk about the value of the U.S. dollar really ramping up recently and versus the Brazilian real. That makes our commodities kind of high priced on the world market, doesn't it?
Yeah, it does. We're looking at a higher trend in the dollar here. I look for some resistance to come in on the dollar at about 99.70, and that's likely going to have a little bit of an impact here on our exports. Of course, exports on beans have been decent here so far, but they have declined here in both and wheat.
All right, Dewey, we'll pause for a break, and we'll come back and talk livestock, see how they're opening up in just a moment. We're talking with Dewey Strickler. We'll be right back. Our guest is Dewey Strickler of AgWatch Market Advisors. He is based in Franklin, Kentucky. Let's open up our livestock trade on a Monday here. We go to the live cattle board in Chicago, and on live cattle, currently we're starting out with February 45 lower. The April contract is down 52 cents. We're at 119.28. And now June futures down 40. We're at 110.88. Now that February contract, Dewey, that happens to be first notice date today on that contract, does it not?
It is, as I understand.
So is that going to cause any market ripples in your opinion?
I don't think it really will. I mean, we got other issues that we're looking at here other than just, the deliveries and so forth. I mean, trade will look to see who puts them out and who takes them. That is just pretty well common every delivery cycle.
I know the February options actually expired last Friday, so they're off of the board now. Let's go to the feeder cattle market, and on the feeders this morning, we begin by looking at that nearby March contract. It's down 30 cents. We're at 134.90. April down 32 cents at 137.18. Remember, we had a lower cash trade had developed late on Friday. It was $1 or $2 lower than the previous week. Now, what about lean hogs? How are we opening up this morning? Well, we are starting with February 68 lower. The active April contract down 85 cents. We're at 65.40 this morning. So general weakness here all across the livestock complex this morning. Do you see any chance for a bounce before the close today here, Dewey, or is it just in the doldrums for a while?
Very likely could be in the doldrums. I would get a little bit friendly toward the hogs here if we can get the April to close above the gap area there at about 68. Otherwise, I'm showing a pattern that we just might still go down and make one more new low before the sell-off is done.
Is coronavirus just too much of an anchor around the market right now?
I think, there's just still a lot of unknowns here. The death toll just keeps creeping higher and higher. So, that said, we don't know how well China has it under control because obviously they're not telling and they're not going to tell. So, that said, I think that we still got a ways to go here before the hogs can start to recover.
All right. Thank you, Dewey, for the information this morning and for helping us kick off this trading week. Dewey Strickler of AgWatch Market Advisors. He is in Franklin, Kentucky. So we're off and running, Janet. Now we see where we go from here.
All right. Sounds like a plan. Thanks, Marlon.